Hi guys, I'm going to talk today about the pound US dollar and where I potentially see it going at the moment. It's always a good idea to look at what the higher time frames are doing. So, look, I'll never place a trade on a monthly chart, but I'll use it possibly just to get direction, see where the market's heading, and then I'll go down through the different time frames to get a zoomed in picture of what's happening. So here, when you're looking at a monthly chart, then obviously what you have to consider is that every single candlestick is worth a whole month. So it's quite a broad picture. You don't necessarily have to go as broad as this, but I wanted to show you what my thoughts were on this particular pair. So at the moment, if I'm looking at the monthly chart, I can see that pretty much I've got a downward direction. It looks, obviously had this high here and it's broken down through this support, down through the next support. It's broken down quite convincingly and it looks like it's doing a little retracement up. It's now hitting on we've got a Bollinger signal there, and I can see also the stochastic is, from the overbought section, it's popping down through the 80 level. So it's giving us an indication that price might be coming down again. If we go to then the next time frame down, which is the weekly, then the weekly looks like this. So a few things that I would do here is I would put a trend line to see what's happening with the trend line. So I've seen, basically we've had a few ABCs down and now it's broken that trend line up. It's also gone past this particular level as well. But you can see with actually at the moment what's happening is that we've got this little move down. I'll also run a Fibonacci into this, so it's bouncing at the moment on the 78.6, so it's overextended to 61.8. But it's also worthwhile putting Fibonacci's from different points just to see what's going on. And you can see if I do this, this is a second point here, then you've actually got that Fibonacci convergence that I teach you on the course, where the 78.6 is lining up perfectly with the 61.8. So yeah, so you can count that as a 61.8. You can go one step further, see what it's like when I go from this leg. Yeah, so from what's interesting, from this leg, it's close to the 50. From the next leg, it's close to the 61.8. And from the next leg down, it's close to the 78.6. Okay, so you'll notice as well, the stochastic has gone down to the oversold section. So it doesn't mean to say that price is going to stop there and retrace back up necessarily. Very often the stochastic will go and just wiggle along here, right down the bottom, while the price slowly comes down. Although we've broken this trend line here, we are actually, in fact, still in a downward trend because we're getting lower lows and lower highs. That is definitely lower than that, and so on. So, we're in a downward trend on the monthly, downward trend on the weekly. Let's just see what's happening on the daily. Again, a weekly time frame, I never trade on such high time frames, but it's just to get the direction and an indication of where the market's, the general momentum of the market. So if we go down to the daily, okay, so here is where that trend line broke. You can see a classic example of it breaking here, coming up and retesting again for it to go up. And the way that I see this at the moment, although we've had this ABC up, this is, to me, just says a double tops. So you can almost consider your zigzag like that. You'll see the first time that it, yeah, you can see basically here, it also was a double tops, because if you go back here, all that happened here is you've had these wicks that poke out. So this was the first level that it tried to break through and it couldn't. And then it came back and it went up to where the top of the wicks are. and now it's broken down. So there's no doubt in my mind that this is a double tops. So you would consider your zigzag perhaps like that. And then the rule for the double tops or the double bottoms, like anything in trading, it doesn't always work 100%, but if you measure, if I get a little line from this point to this point, and then I measure up vertically from the middle to the trend line, you can see it's about 647 pips. So to project that down, you would basically do 647 pips down, which is here. So that would be your target based on the charting pattern. Like I said, guys, you know, same thing with anything in trading. Nothing is ever at 100%. But you know, it does it 70% of the time. So you've got a good clue that that's where the price could be heading based on that head and shoulders pattern. So if we put a line roughly where I'm saying, and you've got to think logically, guys. You've got to think, okay, so here's where we think it's heading. Is there any other support and resistance which back that up? So the answer is yeah. You got a level of support there, level of support there. You can see if I scroll back, this level of resistance happening here. So it makes sense that this could be heading down to here in the longer term. At the moment, what's happening, you can see we've got this little retracement coming back up. So often it does retrace before coming down to meet its target from the double tops or double bottoms. So we have got basically a target in mind based on the pattern of the head and shoulders, based on it being a downward trend for the monthly and the weekly. We've now got an A, B, and then we could potentially look for a C point to trade down. So what we would do is just put the Fibonacci on. Okay, so one of the things I'm looking at this pair, I'm a little bit unsure at the moment, because you've got this, normally we do the Fibonacci from 68 to, from 50 to 61.8. And we've also got, I can often turn on this 38.2 as well. So I'm seeing at this 38.2, there's quite a significant level of resistance at that particular point and just a little bit above. It's making me think that maybe we should have our zone from 50 to 61.8. I'm also going to consider what's happening on the weekly at those levels. And guys, can you see how far I've actually zoomed out? So I zoom out, like most of you know, until you can't see which is a bullish or a bearish candlestick. If I look here, also got this level here. And just widen that slightly. And I wouldn't have seen this level had I not zoomed right out. So at the moment, the way that I'm seeing it is that this would be my zone from your just a bit above your 50 to your 38.2. Obviously, it would be a sell zone. So make that tomato color. Worthwhile going on the weekly. Now, what's interesting is you've also at that exact level got that weekly level of support here, which is kind of backing up where I've got my zone. So I'm happy with my zone at the moment. So just because I've got a zone there, obviously anything can happen. So it could start turning down now, or it could just break straight up. We don't know till we get there. That's why we look for the signals. But based on my zone, I would think that it would probably go to maybe the 50, because that's where the big weekly support was before. And obviously, once it gets into your zone, guys, you need to make sure your stochastic is in the right place. And then you look for the signal, so you don't just trade it down just because there's a sell zone in place. The other thing that you can look at, if you want to be a little bit more careful with your trading, it's sometimes advisable, instead of just taking that first signal, wait, and maybe on the 4 hour, you might get something like a double tops or a head and shoulders or something like that that indicates this reversal. So basically this is what we're presuming that the price might do. And it doesn't mean to say, guys, that you have to take the trade on the daily. But if you know that it's likely to change direction at this point, and it's likely to go at least down to our target point, then what you would want to be doing is zooming in on the 4-hourly chart. Once it gets to your daily sell zone, go to the 4-hourly now. So on the 4-hourly, it might look like this. You might get a double tops that you could potentially trade down as a first indication. And then you might well find the sort of thing that you would look for is, just to give you an idea, not to say it's going to be exactly like this, guys, when it comes, but you would look for trend lines to be broken and retested. You look for divergence as well on the double tops. And then you could do Fibonacci's, and then you would want to be getting in on some ABCs coming down on the 4-hour and even the hourly. And obviously you're running your Fibonacci from A to B, and you're getting like your zones on your 4-hourly as well. From A to B, and in each leg, as many times as you can, then you're going to be looking for these opportunities to trade. You know, looking at the trend lines, looking at the Fibonacci levels, especially these 61 and 50 levels, looking at your Fibonacci extensions as to find your targets as well, in conjunction with previous support and resistance. So all these things you're looking out for, and basically using to help you make that informed decision of where you're going to place your trades. And then, yeah, you can basically trade the 4-hourly down right until the point that until you get that target you've actually set from your daily pattern, which is your double tops here. So yeah, look, it does get a bit involved. It does get a little bit confusing, but I hope that has helped you kind of see how I see the markets, and you know, I'll try and do a few more of these as we go. But if you've got any questions on this video or anything else, then, you know, like always I say, pop onto the chat room or come and see me. Give us a call, drop us an email. You know, we are here to help. We want you guys to be successful. So keep in contact as much as possible. Send your charts through. If you're looking at trades and you're not sure, then ask. So yeah, hope that helps. Thanks, guys.